UK capital gains tax just got much harsher. Your tax-free allowance dropped from £12,300 a year to £3,000 a year. Who did this? Why did they do it? And how do you reduce your capital gains tax bill anyway? Let's break it down. So before we continue this video, I'm just going to say that nothing in this video is financial advice and it's for entertainment purposes only. So around the end of 2022, the Chancellor Jeremy Hunt announced that the capital gains tax allowance would be cut down from 12.3 thousand to 6,000 and then down to £3,000 only. So apparently this was to broaden the tax base after a rough year. And they said that it was still generous compared to other countries. But this creates three problems. It mainly just affects the small investors and entrepreneurs. Because of course someone dealing in millions or large numbers is not gonna be affected by such a change. So now this will take a toll on the little guy. This will also make some investors change their habits of investing and taking profit in order to offset their losses or delay some gains. Although honestly with such a small allowance it doesn't really make a big difference. It will also sort of encourage people in pulling out like small gains whenever they can. So until this rule hopefully changes, here's what you can do to lower your capital gains tax. So one thing you can do is to try to use your ISA every year. So you can put up to £20,000 a year and any gains you make in the ISA are basically tax-free. So especially if you're new to investing, you could maybe take out your holdings from your regular account and put it into an ISA if you haven't already. You can also split your assets between yourself and your spouse because transfers between spouses or civil partners are not subject to tax. So you can sort of benefit from two people's capital gains tax allowance and two people's ISAs basically. You can also claim losses up to 4 years after the end of the tax year and carry them forward to offset future gains. So keep track of your losses. You can also straddle some gains across 2 tax years so that you can sort of use 2 years worth of capital gains tax. There's also something called private residence relief. So your main residence is usually exempt from capital gains tax. So for real estate investors, second homes and buy-to-let is usually taxable. And then of course one of the best ways is being a non-resident basically. But you have to be very careful because it can also backfire. So for example, you can't just like leave the country on holiday and make your profit and come back. You'd have to check out the government website to go through all the rules and see which one applies to you. But generally, if you're like employed full-time abroad and you spend like most of your time abroad, you can potentially fully avoid capital gains tax. But you do need to make sure that you do actually fit in that category. There are also schemes such as EIS, SEIS and VCTs. EIS is Enterprise Investment Scheme that allow you to invest in startups and get huge tax breaks like 30% income tax relief and capital gains tax exemptions if you hold the shares for at least 3 years. SEIS is Seed Enterprise Investment Scheme. SEIS is even more generous, offering 50% income tax relief for higher risk investment. But of course these are high risk investments, so only consider them if you're willing to lose all the money. And VCT is Venture Capital Trust. As for VCTs, these are ways of investing in startups directly. You invest in a VC fund that picks the startups for you. You can get 30% income tax relief on up to £200,000 a year. And after 5 years, gains and dividends are capital gains tax free. But like EIS and SEIS, it's a long-term play, not for a short-term investor. Now, the tax strategy that's been around for years is bed and breakfasting, where you sell an asset to lock in a loss and then buy it back immediately to offset other gains. The taxman saw that one coming and set up a 30-day rule. So if you buy the asset back within 30 days, you can't claim the loss. Instead, consider alternatives like bed and ISA, selling outside an ISA and repurchasing inside it, which we talked about. In short, these tax strategies are legit, but be mindful and make sure that you're playing by the right rules. And do your research and maybe even consult a financial advisor or an accountant before doing anything. So that's all for this video. If you benefited, make sure you share it with your friends and family, and don't forget to like and subscribe and comment your thoughts below, and I'll see you in the next video.